How do you trade zero DTE options? What might be a better question is, what is a zero DTE option? Options are instruments that you can use to play the stock market, and stock options are a very valuable tool. They represent about 40% of the total market. When you're considering zero DTE options, there are your basics, of course. What is a put? What is a call? How do you buy or sell puts or calls? But I want to go just a little bit further. We'll call it expectations management. There are certain things that a lot of people believe that as soon as they buy their put or their call on, say, SPY stock, that's it. They're going to hit a home run. But they continually miss over and over and over again. Expectations management. If you look at the SPY stock itself and you take a rational look at it, you'll realize that SPY stock doesn't move nearly as much as maybe your option is allowing for. Let's break down a few metrics so that you can get a better understanding of zero DTE options, taking you beyond the basics of options, but also understanding expectations management. So when you do trade your zero DTE options, you have a better probability of success and profits. Let's jump in. I've got a few things to show you. Really quickly before we jump in, this is a new channel for me. I do have my primary or my original channel, Cannabis Stock Analysis. Links are down below. Make sure you like and follow this channel. I also have my third channel. What I did was, from my original channel, I was putting up a tremendous amount of content that kind of strayed away from its original intent. I've broken that up into 3 sections. I've got tech stock analysis, I've got cannabis stocks analysis, and then of course this channel, stock market and stock options analysis. Make sure you hit the like and follow button. If the other channels are something you're interested, there's links down below. Unfortunately, YouTube won't let me put a clickable link just yet because this channel is brand new. We'll be getting there. Okay, zero DTE. What is that? 0 days to expiration. Plain and simple. That option expires today, whether it be a put or a call. If it expires tomorrow, and today happens to be Wednesday, October 4th, any zero DTE options today would expire at the end of trading day today. 1-day expirations will trade from today, the 4th of October, to the 5th of October. They'll expire tomorrow. And then, of course, incrementally, you'll see when you jump into your brokerage account, you'll see how many days to expiration. And that's what it boils down to, is days to expiration. That's what zero DTE is. I have some screenshots of SPY stock options. And here we're looking at the calls. At the time that I did the screenshot, SPY stock was trading at 421 point a handful. 15 to 20, I think it was bouncing up and down. I have the puts next, which I think it says 421.17. Since I've taken these screenshots, SPY stock has shot up nicely. So that works out really nicely, because if you look at these stock options, we can answer the question, would it have been profitable just today had you picked the right direction? And that's probably the single most important thing. Number one, you have to pick the right direction. Number two, how profitable will a zero DTE stock option actually be? Now, I didn't play SPY stock today because I wanted to buy calls. I had been talking about this over the past couple of days. I felt that the sell-off that we've seen over the past several days was too much, but I was hesitant to get into those calls. Probably could have made some money. Here is another look at SPY stock, 421.25. At the time I did this screenshot, these are puts on that. Let's jump in and we'll take a look at the chart for SPY so you can see what would have happened, and I'll explain some of those options for you right there. Here we're looking at the price movement for today. The blue stripe actually is post-market from yesterday. The yellow stripe is pre-market today. When I did this screenshot, and you can see the cursor right here, SPY stock was trading roughly 421.20, which is right about down here. I didn't take it back here. I took it right here. Now, moving forward, if we looked at 421.25 422 calls, this is the same screenshot I showed you earlier, they were trading at 76 cents. Now, here they are right now at $2.13. Had I purchased that for 75 cents, I'd be doing okay. That's important. The first thing was I needed to be right about the market. Sometimes the market doesn't really agree with me, and that's the way it is. The other thing is I may be right about the market. The market may turn and move upward, or it may move downward, and I might have purchased the put at that time, but it wasn't enough. And that's something else important. This specific example, from the time that I took that original screenshot until now, we can see that there is a pretty good opportunity. Now, had I bought both the puts and calls and said, I don't know what's going to happen, that would have cost me 150 points. I could have then sold the 422 calls, which are now in the market pretty deeply, pushing to 423, 424 area. I could have potentially picked up significantly more than what I paid with both the puts and the calls, simply because I wouldn't have known what direction the market was going to move. That's a strategy I do often, but it requires the market to move enough. And that's one of the big variables that when you're trading zero DTE options, you need to kind of keep that in mind. What is going to move the market? Profitability for stocks would be one thing. If we get some kind of a news announcement, say Apple or Nvidia or one of those stocks announces an epic number, that could bring a whole bunch of people into NASDAQ in that particular case. But technology is about 23% of SPY stock. So if you are trading SPY stock, that's something to keep in mind that it is heavily weighted towards technology. We get a series of economic reports, and when the economy is pretty steady as you go, economic reports may not be as important because it's more of we expect this, and as long as everything is steady as we go, we will keep moving forward, we being Mr. Market and all the people involved in the trading Mr. Market. Right now, we're not in a steady as we go scenario. Friday, we get payroll numbers. Steady as we go means at this point that non-farm payrolls is probably going to come in fairly firm. The market doesn't want that. The market wants inflation to move lower, so they need employment to kind of ease off a little bit, to ease off consumption by consumers, which is driving inflation, helping to drive inflation. There are other variables. Of course, COVID shutdown was one of them, the massive amount of money that the Federal Reserve created, and then the war in Ukraine. Bond yields. Right now, the market is heavily focused on bond yields because of inflation. This is pushing things significantly. Bond yields are moving higher and higher and higher. The stock market is readjusting itself and slowly moving lower. Volatility itself is a key factor. When you get big moves up, then big moves down, then big moves up on a daily basis. Standard deviation is more of a technical term for it. That's something that's going to affect the catalyst event that could push the market that particular day for your zero DTE option. The US dollar is in focus. As the US dollar moves higher and higher because of bond rates and yield differentials from one country to another, you're getting some 5% out of the 10-year yield from the US. You're getting 0% out of Japan. What do? You dump your Japanese investments and you put your money in the United States. That pushes the dollar up. Sounds like a good thing. Except that lowers profitability for corporate America because you have these multinational companies who, when they bring their money back in and declare it here, the profits, declare it here in the United States, it's less because the exchange rate differential is worsening in that regard. Finally, technical analysis. I don't follow technical analysis. Generally speaking, I've said this before, I think it's kind of silly. But it exists. And because it exists, a lot of people push things on technical basis. If you take a look at the Encyclopedia of technical analysis. I think the best percentage of any of those indicators is roughly about 25 to maybe 30% accuracy. It just doesn't really hit that 50% marker where if you're at least 50% right, you could be profitable. But people trade technical analysis, and because they do, they could affect the market. I look at everything and I ask the question, where's money flowing? Why is it flowing that way? I look at the economy, I look at the consumer. This pushes the market in one direction or another, and Warren Buffett echoes this, it shows you what happened, and then you can apply technical analysis after the fact, but it doesn't really help you when things turn. Here is a quick look at the bond yields. This is what's really driving the markets right now. It's making everybody kind of spooked. I expect we'll probably ease off a little bit. I'll probably be interested in those calls again later, and I'll probably be looking at zero DTE options, but keep an eye on what's happening with the 10-year yield. Here is the same chart, 10-year yield versus, on a percentage basis, the SPY stock. As you can see, as these yields have been moving higher and higher, we've seen some selling in SPY stock. There's your catalyst event. Because of that catalyst event, currently, because the market is focused on interest rates, when there's movement in interest rates, this will affect SPY stock. Something to keep in mind. Okay, what expectations do you have? You want to put on a zero DTE option. Great. What do you expect is going to happen? And maybe in the initial scenario where I said, okay, SPY stock is trading at 420.20. What if I bought a 421 call and a 420 put? In that scenario, I don't know which direction the market's moving, but I feel like the market's probably going to move. Either interest rates are going to continue higher, which will spook the market, everything will sell, or maybe the stock market settles down a little bit, bonds drop a little bit because they've really pushed high quickly. Maybe that affects things, and SPY stock all of a sudden shoots up, is exactly what it did today. So a zero DT option strategy would be to buy both puts and calls. But how high would it possibly go? And in the scenario that I showed you earlier, yeah, that would have worked out today. But expectations management, you need to ask the question, normally, can you put this same trade on every single day? Buy a put and a call at the open, shrug your shoulders, walk away, pick out the color of your Porsche. How far will, on average, the SPY stock move on a daily basis? This is an important question. What is the daily range? And I look at two things. I ask the first question, what is the range between the high and the low? And then what is the range between the change? Real quick sideline there for you, the daily change. If you go up 100 points one day and you go down 100 points the next day, on average, the market hasn't changed. My data, I show absolute value. This is standard deviation. On a daily basis, standard deviation would be 100 points. That's an important distinction to understand. I found textbooks and statistics and, basically statistics books. I've looked at them, textbooks in universities, where they got that one wrong. Here we are looking at the one-day average standard deviation. Remember, standard deviation is, on average, how much will the stock, the S&P 500, move from one day to the next. Now, in this case, this is the S&P 500. It's not SPY stock, but the percentages are, generally speaking, really, really close. And in this case, on average, and you'll excuse 10.0423 because I printed this up today and the data points haven't changed just yet. And as it turns out, it was pretty close to yesterday's move. There hadn't been a change at that point. But if you look way down at the bottom, mean and median, on average, the change for the day The median is the middle number, and that's important to understand between what's the difference between mean and median. Mean is the average. All right, you take every single data point and you say, what's the average? It gives you that number. The median says if there's 1,000 data points, 500 of them are below this number, 500 of them are above this number. That is important because one day you may have a number that is unchanged. The next day you may have a massive 250-point move or 350-point move, and this tends to skew the numbers. So what you're looking for are data points that on a consistent basis show up every single day. Because from time to time you are going to find, and in the case of yesterday, the 3rd of October, a 1.37% price move. That's not normal. It is above average. But you may have a move that there's no movement from one day to the next, and in this case it just happens to be showing up that way, and you get 0%. So looking at the mean and the median are important indicators to understand when you're trying to consider what is average for the change when you consider a 0 DTE option. But this is the one I like the most. I don't really care what the change is so much, because intraday you get a high price and a low price. And if we look at the mean and the median, you'll see that the middle is roughly 0.85%. So if you think that the low is in for the day and you want to buy your 0 DTE option, on average, you should look at this and say, we'll probably see a movement of 0.85% to the new high. This is a really important data point. This is average. Some guys sit there and say, nah, going to the moon. Well, on average, it doesn't. And if you scroll through these numbers, you'll see, and this is just a screenshot of my spreadsheets. I'm looking at these spreadsheets on a regular basis. It really doesn't go above, on average, 1.25% regularly. So if you are putting on a 0 DTE option, buying a call, and you feel pretty certain that the low is in for the day, here's an idea. If the average between the high and the low is 0.85%, take half, 0.425%. Figure out what 0.425% is, take a look at the option, the 0 DTE option, and ask the question, will that, on average, go in the money? That will help you out considerably. But understanding these averages, the mean and the median, and how often and frequently the stock market does move and how infrequently it goes to the moon, this gives you a better concept of what your probability of success is when trading a 0 DTE option. Here is a look at, this is a visual look of what we just saw. This is the daily change on a 4-week moving average. So basically I took the daily change and I asked the question, we may get 0 one day, we may get 2.5% the next day. On average, how do things move? You'll see spikes and valleys here, peaks and valleys. Right now, we're pretty close to about middle. And that's on average over the course of a period of time. Now, one thing I like to do is when we see big valleys there, that would generally indicate that stock options are probably pretty inexpensive because no one is expecting price movement. But if you can target certain catalyst events and preemptively get involved in those, when you see these valleys, you can see that those spikes will really shift things significantly, and that is your to the moon opportunity. The next chart is high-low range. There are periods of time when the SPY stock or the S&P 500 gets stuck and just goes nowhere. Summertime. We just got out of a range where the 4-week moving average from the high to the low was pretty low, although historically not that low. It was a pretty quiet summer. So if you're in this range where the high and low range is much lower than normal on an average basis, especially when you even out the data points and look at a 4-week average, you can see that visually you have the ability to kind of temper your expectations a bit and say, listen, there's nothing on the plate coming up that's really going to push these stocks any further. So my expectation is that we should see a below average move between the high and the low. This expectations management will probably continue more in order to buy or sell some options that those stock options are probably going to be more profitable more consistently, although they may be smaller profits. Nothing wrong with a base hit, just watch the movie Moneyball. Percentage up and down. What do you think the percentage is of all the data points I have that it's positive the next day or negative? I have looked at so many bar charts and things like this, and I asked a simple question: how many days does the market go up? How many days does the market go down? The consistency is a bit shocking when you look at some of these things. The S&P 500 on average will be up tomorrow 50% of the time. On average, about 48.5% of the time, it will be below tomorrow's or today's close. The other remaining is unchanged. So if you were a gambling individual and did not care whatsoever, you could theoretically get involved in zero DTE options and say basically this: 50% of the time, the market will go up, therefore I will buy a call. 50% of the time, the direction will be correct. Then we boil things down to the batting average. Just because tomorrow's close is going to be higher does not mean that you are going to see a movement higher enough to pay for your option. Those zero DTE options have the lowest amount of time you could possibly get. It's either hit or miss. But what you can do is, number one, rationalize that 50% of the time you're going to be on the right side of the market move. Then it's a question of containing and asking the question, okay, if that's the case, maybe I'm only ever looking for a 0.25% move higher in the market, which is effectively 0.25% of the entire stock movement up. How would that affect your zero DTE stock option price? If you're out of the money, say 1 to 2 points or something like that on a SPY stock, zero DTE, and you consistently walked into the market and bought calls every single day without a care in the world, and you said, I only want to hope for at least 20%, at the end of the week, you might get close to break even. And the reason is simply this: you may get one home run in there. You may get 3 losses, and then you get one that's break even. And so you also need to consider how many times these zero DTE options, not only you're correct in the market, which is only going to be about 50% of the time, but also simultaneously it moves enough to go into the money. And that's where expectations management really helps out when you're trading zero DTE options. Understanding that only 50% of the time will the stock market move higher is one of the variables. Then only a certain percentage of the time are stock movements higher above average to cover your moves. But, and as I showed in this one particular example in the beginning, that was the day, this was the day for the week if you bought your calls. Today's Wednesday, the first 2 days and a few days last week, the stock market went lower, 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 lower. So that had been about 4 or 5 days down. But if you paid 50 cents on average, today would have given you a total, and you did this over the past 4 days, today would have been the day where you would have broken even. So if your expectations are that you're going to see much bigger moves on a regular basis, statistically, you're not going to work out. But understanding these movements for zero DTE options is one of the most important things you can do when you're trading these. If you only do the same thing every single day, buy a put or buy a call or buy both, 50% of the time the stock market's going to move high. But will it be enough? That is the big thing, that when you look at these data points, you need to understand that for trading zero DTE options. You only have that one day. Today, those options expire. They could be very valuable, but statistically, you've got to really be accurate and really hone in on your skills, maybe only buying on the dips and going long and looking at the high-low ranges and asking the question, where will this thing end up today? Because statistically, SPY stock or the S&P 500 stock doesn't move nearly as much as people think. And even though that's kind of baked into the price of a stock option, unfortunately, the people that are selling those options know that statistically, it's not going to work. That's why they're selling them. So you need to understand these and get your expectations management set up in such a way that you understand what the probability of your success is, and at the end of the week, you're sitting on profits across the board. One of my favorite strategies, diversification. You only need one real big lottery ticket winner to really offset a lot of losers. Like I said, I have 2 other channels. This is stock market and stock options analysis. If this is the kind of content you're looking for, where I break down these things, kind of bring into the fold an understanding of what you could expect realistically, with the only time I ever say to the moon being more of a joke, laughing at people who are just looking for clickbait. Make sure you hit that like and follow button. I've got the links for my other channels down below that. Again, YouTube will allow me to have those clickable links at some point. I just launched this channel. This is a break off from my original channel. Thanks so much for the like and follow. We'll see you in the next video.